Hello everyone and welcome to another Elliott Wave analysis. Right, so if you have followed me on TradingView, right, you will know that just 4 hours ago, I actually published two ideas that are similar, right? So one is Bitcoin and one is Ethereum. So this video, I will attempt to explain the analysis of both Bitcoin and Ethereum, right? So over here, let me start with Bitcoin, right? So I have multiple videos that talk about this the end of Bitcoin, the peak on I believe this is October 6th, 2025. Right. Since then, I also have a few videos talking about shorting this, right? So if you're interested, you can take a look at my previous videos. So I think before today one, it was on the 10th of February, right? 10th of February, I talk about Bitcoin short. All right, now I want to update on this Bitcoin itself, right? So let's revise a bit, right? Since cycle wave 5 down, we have wave 1, wave 2, wave 3, which is 1.618 of wave 1, right? Wave 4 itself actually looks more like a flat, right? Because you have three wave, right? 3, 3, and a 5, right? This is the fourth wave. And then we break down over here, right? We break down over here on the 25th of January, right? Shortly after that, it tries to move back up the trend line again before it comes down, right? Then this move itself also happens in five wave, right? So then this is the on the 6th of February, right? This is the bottom, right? So then this also have this relationship, right? Where the fifth wave itself is 1.618 of wave 1, right? So I'm talking about this Fibonacci extension, right? So it's using this wave 1. So this entire five wave down, right? Over here, right? You can see clearly this 1, 2, 3, 4, 5 together with all the breakdowns, right? Of the five waves and three waves. Right, so after this, you have after 6th of February, this bottom, you actually have a B, and a C, right? So if you look at this A is just a 1 day bar, right? And then you have a wave B that is a B, C itself, right? Okay. Then you have this C wave, right? 1, 2, 3, 4, 5. Now, one thing to take note of this is the truncation over here, right? Truncation over here for the fifth wave of wave C. Now, there's a reason why I put it here, right? So usually you could put it here, right? And then you can argue 1, 2, 3, 4, 5, right? So the reason why I shift it over is because of Ethereum. Okay, because of Ethereum. Later I'll go through, right? Because Ethereum has a similar wave structure. It's just that for Ethereum, this is actually higher than the 4th of March, right? And over here, I have a preference of truncation, right, rather than a breaking of Elliott wave rule. So when I go through Ethereum later, I will bring up this point again. So for now, take note that this end of C wave, right, is actually lower than um, this high over here for the third wave, right? So then if I'm going to trade this, right, you see over here, firstly you see that this candlestick reversal over here, right, on the Friday, right? So if I have to put in this trading right over here, right, my stop loss will naturally be above this high, right, above this um, high over here, right? So over here is about 74,400, right? And then where is my take profit point? Okay, my take profit point. Firstly, I look at the previous wave 4 over here, right? Because this is um, the nearest hard support, rather a more firm support over here. So then it gives me a target of 49,000, about 350, right? So ultimately, is this the target? I think this is not, right? Because we are going to a third wave, and third wave are usually the strongest and the longest, even in a correction, even though it may not always happen, right? But now if I use this Fibonacci, right, of this entire wave down, this entire wave A, right, and then I put it over this the end of this end of this wave, right? So between using this and this, the difference is really not a lot, right? So for now, you see that I've put it over here, right? Which is this where I identify the end of C wave. And if you want a one-to-one, then the next move is actually very, very low at 8,160, right around here, 8,160. Now this may be unacceptable or ridiculous for many, right? Especially for the crypto bros. So over here, then I think a more acceptable target will be this cycle wave 2 low, right? So this gives us a target of 15,480. Okay, so over here, then you have this wave down, right? The first target where we will take a look at how the price reacts, and then we have this ultimate target of 15,000 and around 500 to be more conservative. But over here, then we will review and see how the wave plays out, right? And also we'll take a look. We'll review the global economy, okay? Because eventually we may be looking at 8,200, okay? So now this explain the idea for this Bitcoin short, right? That I've published. Now let's go to the Ethereum short. Okay, so if you go to Ethereum, right? Ethereum has a very similar price structure. Okay, so over here, Ethereum actually peaks earlier than Bitcoin. Right, it actually peaked on the 24th of August. Similarly, I have the breakdown of the waves. Okay, so right, let me take a look at this. Okay, I believe my previous one wasn't safe, right? Because it looks slightly different from this idea, right? The wave actually this is updated. What? Okay, I probably missed saving this, but let's go through nonetheless. All right. So over here you have wave one. Okay, wave one over here. Then this is a leading diagonal. Then you have a A B C for wave two, and then we have a wave three, right? And over here then we have a wave four, right? So because this is not updated, right? So actually this alternative actually becomes the actual wave, right? So let me see, maybe this is in another maybe I have it in another place. Yeah, all right, so actually I used the wrong watch list, right? Never mind. So this is the cleaner one, right? Okay, so over here, as I mentioned, this is a leading diagonal, and then I have a wave 2, wave 3, right? And then I have a A, B, C, wave 4, okay? And then over here you see this last wave down, 1, 2, 3, 4, 5, right? So I go over here, 1, 2, 3, 4, 5, you can see, right? So then if this entire one becomes a one uh, one wave down, so this entire one is actually wave A. So this is very similar to Bitcoin. Okay, and then I have A, B, C. Now, just now when I was going through Bitcoin, I mentioned that I Bitcoin is a truncation, and because of Ethereum, right? And that's because Ethereum over here on the 13th March is actually higher than the 4th of March. Okay, so then this becomes our wave 2 or wave B, right? So the entire move down is a wave A and then a wave B, right? So this one becomes a wave A. Okay, wave A. And then we have another one, okay, which is a wave B. And so over here, actually, we are going to a wave C. Now, similar to Bitcoin, I use the next nearest support over here, right? And then I have the target of 1,385. right? And also using the same technique, this entire wave, right, against the top of wave B, what happens over here is that you don't actually see Ethereum 1:1, right? So it could mean that Ethereum could literally go to zero, or we will use the same technique as we use for Bitcoin, right? We find the um, next support, which over here is 880. Okay, so when we reach 880, then we'll review again, right? So when the time comes that it hits 880, right, Bitcoin should also hit um, our maybe near the 15,000 kind of target. Okay, so yeah, that's it for Ethereum. I will not go through too much simply because the wave structure is very similar to Bitcoin and they have a high beta, right? So that means that their correlation is very high, maybe near to 1. Okay. So Ethereum itself, then you have an ultimate target of 880. Okay, so that's it for now, and good luck in your trading. Thank you.